What if I told you that you do not need thousands of dollars to start investing and building real wealth? What if the biggest lie you have ever been told about investing is that you need a lot of money to get started? Because here's the truth. The most powerful investment anyone ever makes is not the biggest one, it is the first one. And you can make your first investment today with whatever money you have right now. Today on Sunny Aurum, I'm going to show you exactly how to start investing with little money and how to turn those small early investments into real lasting wealth over time. Stay until the end because in the final section, I'm going to show you the single most important investing decision you will ever make, and it costs almost nothing to get right. Welcome back to Sunny Aurum, where your money finally makes sense. If you are new here, we break down complex financial topics into simple, actionable steps anyone can follow. Make sure you subscribe and hit the bell so you never miss a golden opportunity. Now let us get into it. Before we talk about where and how to invest, let us talk about why starting small is not just acceptable but actually incredibly powerful. Most people have this mental image of investing as something rich people do with large amounts of money. They picture Wall Street traders moving millions of dollars. They picture wealthy businessmen writing massive checks into hedge funds. And because their reality looks nothing like that image, they conclude that investing is simply not for them yet. Maybe later, maybe when they have more money, maybe someday. But this thinking is not just wrong, it is financially devastating. Because the single most powerful force in investing is not the amount of money you invest, it is time. And every single day you wait to start investing is a day of compound growth you will never get back. Here is a number that will change how you think about this forever. If you invest just $50 per month starting at age 20 with an average annual return of 10%, by age 60 you will have over $316,000. From just $50 per month per $16,000 per month. $50.50. That is less than most people spend on coffee and food delivery in a single week. But if you wait until age 30 to start that same $50 per month, you will have only $113,000 by age 60. Same amount invested per month. Same return. But $200,000 less, just because you waited 10 years. That waiting cost you $200,000. Let that sink in for a moment. Small investments started early beat large investments started late almost every single time. This is the mathematical reality of compound interest. And understanding it deeply is the first and most important step in your investing journey. The first step to investing with little money is changing your definition of what investing actually means. Most people think investing means buying stocks on a complicated platform with lots of money. But investing simply means putting money into something today that will be worth more in the future. That definition opens up a much wider range of possibilities than most people realize. Investing in yourself, taking a course that increases your earning potential, is an investment. Investing in an index fund with $20 is an investment. Buying a book that teaches you a high-income skill is an investment. Starting a small side business with $50 is an investment. Once you expand your definition of investing, you realize you've been surrounded by investment opportunities all along. The question is not whether you have enough money to invest. The question is whether you are making the smartest possible use of whatever money you do have right now. And the smartest use of small amounts of money, especially early in your financial journey, is a combination of investing in your own skills and earning potential alongside putting even tiny amounts into financial instruments that compound over time. Before you put a single dollar into any investment, you need a foundation. And that foundation has two components that absolutely must be in place before you invest a single dollar in the market. Component 1, a small emergency fund. Before investing anything, you need at least $500 to $1,000 sitting in the savings account that you do not touch. This is your financial safety net. Without it, any unexpected expense forces you to pull money out of your investments at potentially the worst possible time. Even $500 in emergency savings dramatically reduces the chance that life surprises will derail your investing journey before it has a chance to build momentum. Component 2.0, high interest debt. If you have credit card debt at 18 to 25% interest, paying that off is the single highest return investment you can possibly make. Paying off a debt that charges you 20% interest is mathematically identical to earning a guaranteed 20% return on your money. No investment in the stock market comes with a guaranteed 20% return. So before you invest, eliminate high interest debt first. Once you have a small emergency fund and no high interest debt, you are ready to start investing. Even if that means starting with $20 or $50 per month. The foundation matters more than the amount. Now let us talk about the actual investment options available to someone starting with little money. There are 5 specific options I recommend, ranked from most beginner-friendly to slightly more advanced. Option 1. Index funds. This is where almost every beginner investor should start, and honestly where most experienced investors should stay. An index fund is a collection of hundreds or thousands of stocks bundled together into one investment. When you buy one share of an index fund, you are essentially buying a tiny piece of hundreds of companies at once. The beauty of index funds is threefold. First, they are diversified, meaning your risk is spread across hundreds of companies rather than concentrated in one. Second, they are low cost, with fees often below 0.1% per year. Third, they consistently outperform the majority of actively managed funds over long periods of time. The S&P 500 index fund has returned an average of approximately 10% per year over the last several decades. You can start investing in most index funds with as little as $1 through modern brokerage platforms. Option 2. Exchange-traded funds or ETFs. ETFs are very similar to index funds, but they trade on the stock market like individual stocks, meaning you can buy and sell them during market hours. They offer the same diversification and low-cost benefits as index funds and are equally beginner-friendly. Most major brokerages allow you to buy ETFs with no minimum investment. Option 3. Fractional shares. One of the biggest barriers to investing used to be that popular stocks like Amazon or Google cost hundreds or even thousands of dollars per share. Fractional shares completely solve this problem. Most modern investing platforms now allow you to buy a fraction of a single share for as little as $1. Want to own a piece of Apple? You can buy $5 worth of Apple stock right now. Option 4. Dividend stocks. Dividend stocks are shares in companies that pay you a regular cash payment simply for owning their stock. These payments are typically made quarterly and provide a real income stream from your investments even while the value of your shares grows over time. Many dividend-paying companies have histories of increasing their dividends year after year, meaning your income from these investments grows over time automatically. Option 5. High-yield savings accounts. While not traditional investments, they are significantly better places to keep your money than a standard bank savings account. High-yield savings accounts currently offer interest rates many times higher than traditional savings accounts. For money you might need within the next 1 to 2 years, a high-yield savings account is a smart and safe place to keep it growing. The single most important investing habit you can build, especially when starting with little money, is consistent automatic investing. And this strategy has a specific name: dollar cost averaging. Here's how it works. Instead of trying to invest a large lump sum at the perfect time, you invest a fixed small amount at regular intervals regardless of what the market is doing. Every week or every month, the same amount goes in automatically, whether the market is up, down, or sideways. This strategy is powerful for 3 reasons. First, it removes the emotional element from investing. You are not trying to time the market or guess when prices will be low. You simply invest consistently and let time do the work. Second, when markets drop, your fixed investment buys more shares at lower prices. When markets rise, your shares are worth more. Over time, this averages out your cost per share in a way that consistently benefits long-term investors. Third, automation makes it effortless. When investing happens automatically, it requires zero willpower, zero decision-making, and zero discipline in the moment. It simply happens. And things that happen automatically happen consistently. Set up your automatic investment today. Even $20 per week automatically invested in a low-cost index fund is enough to begin building real wealth over time. Starting with little money is just the beginning. The real game is growing your investment contributions over time as your financial situation improves. And there are 3 specific strategies for doing this that compound your wealth building dramatically. Strategy 1. Increase your investment amount every time your income increases. Every raise, every bonus, every new income stream, commit to directing at least 50% of that increase directly into your investments before it touches your lifestyle. This keeps lifestyle inflation in check while dramatically accelerating your wealth building. Strategy 2. Reinvest all dividends. When your investments pay you dividends, do not take that money as cash. Reinvest it automatically back into more shares. This creates a compounding snowball effect, where your dividends buy more shares, which pay more dividends, which buy even more shares. Over decades, this reinvestment of dividends accounts for a massive portion of total investment returns. Strategy 3. Increase your earning potential alongside your investing. The fastest way to have more money to invest is to earn more money. Investing in skills, education, and career development that increases your income creates more fuel for your investment engine. The combination of increasing income and consistent investing is the most powerful wealth-building formula available to anyone starting from scratch. And here is the final section, the single most important investing decision you will ever make. And it has nothing to do with which stock to pick or which fund to choose. It is simply this: start today. Not next month when you have more money. Not next year when things are more stable. Not someday when everything feels right. Today, with whatever you have, even if it is $10, even if it is $5. The act of starting, of making your first investment, of opening your first brokerage account, of setting up your first automatic contribution is the single most financially impactful decision you will ever make. Here's why this matters so deeply. Every single day you delay is a day of compound growth you will never recover. The mathematics of compounding are ruthlessly unforgiving of delay and endlessly rewarding of early action. $1 invested today is worth dramatically more than $1 invested 5 years from now, not because of the dollar itself, but because of the time that dollar has to grow. And beyond the mathematics, starting creates momentum. Your first investment, no matter how small, changes your identity. You go from someone who wants to invest to someone who invests. That identity shift changes every subsequent financial decision you make. You start paying more attention to your spending. You start looking for ways to increase what you can invest. You start thinking like an investor, and that mindset compounds just as powerfully as the money itself. The wealthy did not start wealthy. They started investing. They started before they felt ready. They started with less than they wished they had. They started anyway, and they never stopped. That is the entire secret. Start, keep going, never stop. So there you have it, the complete guide to investing with little money and building real wealth. Step 1. Understand why small investments started early are incredibly powerful. Step 2. Build your foundation first. Step 3. Choose beginner-friendly investments like index funds and ETFs. Step 4. Set up consistent automatic investing. Step 5. Grow your contributions over time. And Step 6. Start today. Your action step right now. Open a brokerage account. Fund it with whatever you can. Set up an automatic monthly contribution. And let time do the rest. If this video helped you, please give it a thumbs up and subscribe to Sunny Aurum for a brand new video every single week. Drop a comment below. What is stopping you from investing right now? I read every single one. Stay golden.